Let me be absolutely direct with you right now, because nobody else in this financial media circus has the stomach to say it to your face. You missed Palantir. You watched it go from $8 to over $180, and you did nothing. You missed Nvidia. You watched Jensen Huang turn a graphics card company into the most important piece of infrastructure on planet Earth, and you sat on your hands with your money parked in a savings account earning 3%, while real wealth was being created in broad daylight. That is not bad luck. That is not bad timing. That is a failure of attention, a failure of conviction, a failure of basic financial literacy. But here is the thing that should terrify you more than missing those two trades. There is a technology emerging right now that makes both of those opportunities look like warm-up acts, and you are about to miss this one too. Unless you stop what you are doing and pay very close attention to every single word I am about to say. If the information in this video is worth $1 to you, then subscribe to this channel for free right now, because the analysis I am about to deliver would cost you thousands of dollars from any serious institutional research desk. I am giving it to you at no cost. Hit the subscribe button, hit the notification bell, because when the next critical update on this opportunity drops, you cannot afford to find out about it 3 weeks late. That is not a request. That is financial self-preservation. Now, before we talk about what is coming, we need to perform a very cold, very honest autopsy on what already happened. Because if you do not understand why you missed Palantir and Nvidia, you are going to miss the next one with the exact same cognitive error running the same subroutine in your brain. Palantir was not a mystery. It was not hidden. In 2020 and 2021, the company went public and was screaming at you through every data point available. They had government contracts with the CIA, the NSA, the Department of Defense. They were building the operating system for how the most powerful institutions on Earth make decisions using data. The product was real, the revenue was real, the moat was real, and the financial press spent 2 years telling you it was overvalued, telling you the CEO was eccentric, telling you the path to profitability was unclear. So you listened to the noise instead of the signal, and you passed. Nvidia was the same story, told even louder. Jensen Huang stood on stage and told you the world was about to be rebuilt around artificial intelligence, and the graphics processing units were the engine that would power all of it. He was not subtle. He was not cryptic. The company's data center revenue was doubling, tripling, quadrupling quarter after quarter. The numbers were not hiding, but the retail investor community spent 3 years debating whether the stock was too expensive at $40, then $60, then $100, while institutional money was loading up hand over fist. The lesson from both of those situations is identical, and it is this: transformational technology is always called overvalued by people who do not understand what transformation actually looks like financially. They price it like a mature business. They apply traditional valuation multiples to a company that is not operating in a traditional paradigm. And while they debate price to earnings ratios, the stock goes up 800%, and they are still on the sidelines holding their opinions like they are worth something. The reason I am telling you this is not to make you feel bad, though if it does, that is an appropriate response. The reason I am telling you this is because the exact same pattern, the exact same technological inflection point, the exact same window of asymmetric opportunity is open right now in quantum computing. And you're standing in front of it making the same calculation errors that caused you to miss the last 2 generational trades. So let us fix that. Quantum computing is not science fiction. It is not a theoretical concept that physicists debate in academic journals. It is a weapons-grade technological shift that governments around the world are treating with the same strategic urgency they once assigned to nuclear programs. Let me give you the numbers, because I deal in numbers, not narratives. The United States Department of Energy has committed $625 million across 5 national quantum research centers. The Department of Defense has requested nearly $1 billion for quantum-related research and development. The National Science Foundation is deploying $100 million, and those are just the American numbers. Globally, governments have committed over $65 billion to quantum computing infrastructure and research. When governments spend money at that scale and at that speed, they're not investing in a concept. They're investing in something they believe will determine who controls the world's critical infrastructure, financial systems, military communications, and encryption architecture for the next 50 years. Here's the physics in plain language, because you need to understand what you are investing in. Classical computers, every device you own right now, think in binary. A bit is either a 0 or a 1, one state at a time. A quantum computer uses something called a qubit, which can exist as 0, 1, or both simultaneously through a property called superposition. What that means practically is that a quantum computer does not solve a problem by checking one answer at a time. It evaluates an enormous number of possible solutions simultaneously. Google's Willow chip already demonstrated this by solving a computational problem in under 5 minutes that would take the most powerful classical supercomputer on Earth 10 septillion years. That number is not a rounding error. That number means classical computing is categorically, not incrementally, inferior for certain classes of problems. And those classes of problems happen to include drug discovery, financial modeling, logistics optimization, climate simulation, material science, and most critically, breaking every encryption standard currently protecting the world's digital infrastructure. That last point is why this is not a nice-to-have technology for governments. It is an existential priority. The quantum computer that breaks encryption does not just read your emails. It dismantles the security architecture of every bank, every military network, every power grid, and every government database on the planet simultaneously. That is why $65 billion of government money is chasing this. That is why the smartest and most well-funded technology companies on Earth are in this race. And that is why the quantum computing market is projected to reach $850 billion by 2040, representing roughly 30% compound annual growth from current levels. Now let us talk about where the specific opportunity sits and which 3 companies are positioned to capture it. The first company is IonQ, ticker symbol IONQ, and if you are going to understand one thing about this company before you do anything else, understand this. They are the only pure-play publicly traded quantum computing company that has crossed $100 million in annual revenue. In a sector where most companies are still running what are essentially very expensive science experiments with minimal commercial output, IonQ generated $130 million in revenue last year and recorded $61 million of that in a single quarter, the last quarter of 2025 alone. That is 400% year-over-year growth. They are projecting over $200 million in revenue for the current year. These are not projections built on hope. These are projections built on a backlog of real contracts with real customers, paying real money. 80% of that revenue comes from commercial customers, not the government, which means they have built a diversified business that does not live or die on a single contract renewal. They are sitting on $3.3 billion in cash, which in the current environment is not just a balance sheet number, it is a war chest that allows them to acquire competitors, accelerate research and development, and survive any market downturn that shakes out weaker players in the sector. The acquisition they just announced is the most strategically significant move in the quantum computing industry this year. They are purchasing Skywater Technology, a US-based semiconductor foundry, for approximately $1.8 billion. This transforms IonQ from a quantum computing company into the first vertically integrated quantum company in existence, meaning they will control the entire supply chain from chip design to chip fabrication. The same model that gave Tesla its structural cost and quality advantage over every other electric vehicle manufacturer on the planet. Skywater carries DMEA Category 1 accreditation, which means they are approved to manufacture chips for the United States military and defense agencies. That accreditation is not something you buy. It is something you earn through years of compliance, security clearance, and demonstrated reliability. It is a structural moat that most competitors cannot replicate in any reasonable time frame. The chart on IONQ is telling a story if you know how to read it. The stock found support, it established a higher low, and the volume pattern on the recent rally suggests institutional accumulation, not retail speculation. There is resistance above current levels from investors who bought near the peak and are waiting to break even before they sell, which will create some choppiness. But the underlying business trajectory and the balance sheet strength make this the most commercially de-risked of the three opportunities I am presenting today. The second company is D-Wave Quantum, ticker symbol QBTS. And before you dismiss it because the revenue number is smaller, I need you to understand that D-Wave is doing something that almost no hardware company in history has managed to do simultaneously. They are generating software-level gross margins while manufacturing genuinely novel, genuinely complex physical hardware. Their margins on the product they are currently selling are better than Nvidia's. Think about what that sentence means. Nvidia, the company that every serious investor on Earth spent the last 3 years celebrating as the greatest capital allocation story of the modern era, earns lower margins on its product than D-Wave earns on its quantum annealing systems. That is not an accident. That is a signal. When customers are willing to pay a premium that extreme for a product, it is because the product is solving a problem that nothing else can solve at an acceptable level. D-Wave uses a different computational approach called quantum annealing, which is specifically engineered for optimization problems, the most efficient delivery route for a fleet of vehicles, the optimal scheduling of workers across a global manufacturing operation, the fastest way to rebalance a financial portfolio across thousands of variables simultaneously. Their technology is not theoretical. It is operational today. Right now, with 135 paying customers, including LG, Sharp, and Angel. Their revenue last year was approximately $25 million, which is small, but the growth rate is significant, and the margin profile is extraordinary. They have an investor day scheduled for June 2026, and serious companies do not schedule investor days on the New York Stock Exchange when they expect the numbers to disappoint. They schedule them when they are throwing a party. The third company is Rigetti Computing, ticker symbol RGTI. And I want you to do something unusual here. I want you to hear an ugly revenue number and not panic. Rigetti's revenue last year was $7 million. It declined 56% from the prior year and missed analyst estimates. Now, every short-term investor just closed the tab. Every momentum trader moved on. And that is exactly the kind of reaction that creates opportunity for people who are paying attention to the right variables. Rigetti is not a revenue story right now. It is a technology story. They achieved 99.9% 2-qubit gate fidelity at 28 nanosecond gate speed on a prototype system. Those numbers are meaningless jargon to you until I translate them. Rigetti's chips are currently the most accurate quantum chips on the planet. They are not outsourcing fabrication to a third party. They own and operate their own quantum chip fabrication facility, which gives them iteration speed, quality control, and manufacturing independence that competitors who rely on external foundries simply cannot match. They have a new chip called Lyra coming later this year that will deploy this fidelity technology at commercial scale. They have a partnership with Nvidia through the Q platform, which is Nvidia's open architecture for connecting AI supercomputers with quantum processing units. When Nvidia selects your hardware to integrate with their most important platform, that is not a casual endorsement. That is a billion-dollar company telling the market that your technology is real and that it fits into the future. They are building. They have a $100 million deployment contract with the United Kingdom, an $8 million hardware contract with India, which represents their largest disclosed hardware deal, and a $250 million partnership with Quanta Computer out of Taiwan to build commercial-scale manufacturing capacity. The Taiwanese know how to make chips. That partnership is not decorative. The chart on Rigetti is showing the same structural pattern it showed before, both of its previous major breakouts. The crash is flattened. The stock is finding footing around $14. The previous breakout pattern suggests that a move above $20 would confirm the next leg of the move. I would rather pay $20 for Rigetti after a confirmed breakout than pay $14 before the pattern resolves, because the confirmation dramatically improves the probability of the trade working. That is not timidity. That is how you survive long enough to take the next trade. Now let us do the mathematics that nobody in financial media is willing to do publicly because it makes people uncomfortable. The quantum computing market is currently valued at approximately $1.5 billion across the pure-play public companies. The projected market size by 2040 is $850 billion. If the public pure-play companies capture even 10% of that market at maturity, the aggregate market capitalization of these businesses needs to be multiple hundreds of billions of dollars against a current aggregate of roughly $1.5 billion. That is a mathematical gap that does not care about your feelings about valuation. Now, most of that value will not be distributed equally. The companies with real revenue, real moats, real technology differentiation, and real cash reserves will capture a disproportionate share. IonQ with $3.3 billion in cash, genuine revenue acceleration, and now vertical integration is positioned to be the sector consolidator, the company that acquires weaker players and emerges as the infrastructure standard. The timeline matters enormously here. Google's breakthrough with the Willow chip, the Caltech quantum error correction research, IBM's new processor, these are not incremental improvements. They are the same kind of step function advances that we saw in semiconductor manufacturing in the early 2000s. When the technology curve bends this sharply, the investment window compresses. The people who make serious money in these situations are not the ones who wait for certainty. They are the ones who position ahead of certainty with a rational risk management framework and hold with discipline until the thesis plays out. That is the discipline I am asking you to develop. Here is the most important thing I'm going to tell you today, and I want you to hear it clearly because this is where every single investor in this space has gone wrong already. You can have the right stock, the right technology thesis, the right entry point, the right 3-year outlook, and still walk away from this trade with less money than you started with. I have watched it happen repeatedly. IonQ ran over 1,000%. Most of the people who owned it did not make 1,000% because they bought at the top after seeing it on social media, or they bought at the right time and then watched it fall 70% from the peak without a single plan for what to do at any price level. They had no selling rules. They had no predetermined exit criteria. They had no framework for the difference between a healthy consolidation and a trend reversal. They had conviction without structure, which in financial markets is just a more expensive version of gambling. The specific stocks I have walked you through today are still in play. The thesis is intact. The government money is flowing. The technology is accelerating. The commercial revenue is building. But none of that matters to your actual financial outcome. If you do not know the answer to one simple question before you enter any position, at what price, under what conditions, with what volume pattern, and against what time horizon will you sell? If you cannot answer that question before you buy, you have no business buying. That is not a suggestion. That is the difference between the investors who captured generational wealth from Nvidia and Palantir and the investors who owned those stocks and still somehow ended up roughly flat or negative because they held through the parabolic move, refused to take profits, watched it correct 60%, panicked, and sold at the bottom. The opportunity in front of you right now in quantum computing is real. The mathematics support it. The technology supports it. The geopolitical urgency supports it. What does not yet support your success is your selling discipline. And that is the variable you need to fix before anything else. I have spent this entire video giving you the framework, the companies, the numbers, and the cold, honest context that most financial commentators are too cautious or too commercially incentivized to give you. Now, I am going to give you a direct challenge. You have two choices. You can do what you did with Palantir, You can do what you did with Nvidia. You can bookmark this video, feel vaguely informed, go back to your daily routine, and check back in 2 years when these stocks have moved significantly, and spend your energy explaining to yourself and everyone around you why you knew about it but did not act. That is the path of least resistance, and it leads exactly where you already are. Or you can treat this moment with the seriousness it deserves. You can study the 3 companies I have walked you through. You can build a position framework with a clear entry thesis, a clear risk management rule, and a clear selling criteria before you commit a single dollar. You can subscribe to this channel so you do not miss the next update when the pattern on Rigetti confirms, or when IonQ's next earnings report validates the revenue trajectory. The quantum computing window is open right now. It will not stay open indefinitely. The early money in Nvidia was made between 2013 and 2016, not in 2023. The early money in Palantir was made in 2020 and 2021, not in 2024. You are currently standing in the early window for quantum computing. What you do in the next 30 days will determine which version of the story you get to tell in 5 years.